It's March 2026. Nvidia has just held GTC, its main conference of the year. Nvidia stock is trading around $183. It is still the most valuable company in the world after Apple and Microsoft briefly took the lead. But here's the billion-dollar question. Has the AI bubble already burst, or are we simply seeing a healthy correction before a new move toward $300? Today, we'll break everything down: the numbers, risks, forecasts, and my personal view. Let's get started. Over the past year, Nvidia stock has grown by about 50%, but in 2026, it's currently down. The peak was $212 in October 2025, and the low dropped to $86 in April of the same year. Now we're seeing consolidation again around $180 to $185. Today, we'll look at the latest financial results, what Jensen actually said at GTC, the risks that many people ignore, and whether the current price is already attractive. We'll also discuss where the stock could go by the end of 2026. Nvidia is the largest producer of GPUs and chips, with a market cap of over $4.5 trillion, making it the most valuable company in the world. The PE is around 37 to 38, which is significantly lower than last year. Forward PE is about 23 to 29, depending on estimates. 2026 hasn't started well. The stock is down about 3.5% year-to-date. There's been strong volatility after the latest earnings report, but let's take a look at what's happening inside the company. Over the past year, revenue reached $216 billion, up 65% compared to the previous year. Net income is around $120 billion. Data centers are the main driver. Growth continues, although the pace is slowing down. The forecast for the current quarter remains very strong, even after excluding China. At GTC 2026, Jensen Huang made several bold statements. Expected demand for Blackwell and Rubin chips through 2027 is around $1 trillion. The company expects to generate that level of revenue from these platforms over several years. Nvidia plans to release the Vera Rubin system later this year. According to the company, this system, consisting of 1.3 million components, will deliver 10 times better performance per watt compared to Blackwell. This is a major step forward, especially since energy consumption is one of the key challenges in AI infrastructure. Blackwell is already sold out, with huge waiting lists. The transition to Rubin is expected in 2027. At the same time, new AI applications are emerging, creating additional demand beyond traditional data centers. The company has also signed or extended contracts with Nebius, Amazon, IBM, Cisco, Dell, Nokia, and many others. On Monday, Huang introduced Nvidia Croc 3, the company's first chip from a startup it almost fully acquired in a $20 billion deal in December. This became the largest acquisition in Nvidia's history. Shipments are expected to begin in the third quarter. Automakers such as BYD, Isuzu, Nissan, and Geely are developing autonomous vehicles using Nvidia chips. Huang also revealed details of a previously announced partnership. He said that by 2028, a ride-hailing service will launch a fleet of vehicles powered by Nvidia software in 20 cities across 4 continents. The project will begin next year in Los Angeles and San Francisco. Nvidia plans to earn as much from software as it does from hardware. Huang confirmed that Nvidia AI Enterprise subscription, priced at around $4,500 per chip per year, is becoming the standard for large corporations. For Huang, hardware is just the foundation. The real product today is the intelligent software layer that makes everything run efficiently. But not everything is perfect. Let's add some realism. Key risks for 2026 to 2027. Loss of China due to export restrictions. Customer concentration. Top 2 clients account for about 36% of revenue. In-house chips from major players like Google, TPU, Amazon, Trainium, Meta, and Microsoft, Maya. Potential decline in capital expenditures in 2027. High valuation, even forward PE of 23 to 29 is still expensive. Slowing growth. If revenue grew about 126% in 2023 and 114% in 2024, then in 2025 it slowed to 65%. Yes, that's still strong growth, but the slowdown trend is clear. At the same time, net profit margins remain very high at around 55%. The company has now delivered over 11 consecutive quarters with revenue growth above 55%. It's also important to consider that competitors are catching up. Nvidia's dominance over the past 2 years may not continue. AMD is a clear example, and other players should not be ignored. If several risks materialize at once, a correction to $140 to $150 is wholly realistic. Now let's discuss, is it expensive or is it already a buy? The current PE of 37 to 38 is no longer extreme. A forward PE of 23 to 29 with earnings growth of 30 to 50% per year looks reasonable for an AI leader. A PEG ratio below 1 puts it in an attractive zone. Many analysts see $260 to $300 by the end of 2026. The most aggressive targets are $350 plus. The average target is around $265 to $270. My view: short-term, 3 to 6 months, high probability of a move to $200 to $220 on Rubin hype and strong earnings. Mid-term, by the end of 2026, around $230 to $250, possibly higher if there are no major geopolitical shocks and CapEx continues to grow. My personal plan: I don't currently hold Nvidia stock, but if I were to buy, I'd start in the $150 to $170 range gradually. The ideal scenario would be below $130 to $140. Unlikely, but still possible. Nvidia remains the main beneficiary of the AI revolution. The only question is price and timing. Now, write in the comments, what do you think? Bubble or just the beginning? Your forecast for 2026: $250, $300, $400, or a drop below $150? Like the video if it was useful and interesting. Subscribe so you don't miss new content about other companies. There's a lot more coming. This was Investment Assistant. I hope this video was interesting and most importantly useful. See you next time.